And good morning to you. Welcome back to another disruptive week of Everything Money. Let's do this thing. All right, guys, good morning. Let's do this. So we had it looks like futures are down again, but what is going on here? I just looked at them. They were down 84 points on the Dow, and now it's 6. So things are coming back. That's wonderful. The market never goes down. Baba keeps going down, though. It's incredible. This Alibaba thing is nuts. Tesla, they reported pretty good deliveries on cars, which is great. What else do we have here? Why don't we look at Alibaba? They're down again. I mean, they're getting into the 140s. China's getting tighter. Well, what do you expect? Communist country. All right, let's get into some stuff, and we will figure out the news of the day after you hear what I have to say. There's nothing else left to be said, so it is what it is. Futures are down, even though Evergrande is in trouble. Tesla rises after deliveries. I'm not going to talk about Tesla in this story. Mostly, I just want to focus on the Evergrande thing. Investors will keep a close watch on the U.S. Treasury yields after the latest week showed an increase in consumer spending, accelerated factor activity, and elevated inflation growth. Guys, this inflation thing, it's really becoming, I mean, it's funny to me that the Fed can say transitory, and I'm telling you what, things are not transitory. I've been telling you since day one, things are not transitory. And if you mean transitory, define it. They never defined it. When you have shipping issues like you're seeing, it's not transitory. Hold on one second. I need to think here. Damn, I meant to hold the story up here. It had a great graph. Was it Wall Street Journal? Hold on. Damn, I can't remember. There was an awesome graph, and it showed shipping containers and how much they cost. And it was like a moving graph. Man, I can't find it. But it was basically showing that last year at this point, a container would cost you, I don't know, $3,000, $4,000, $5,000 to ship, and now it's about $19,000 to $20,000 to ship a container. It's just incredible, and of course, those costs are going to go into your cost of buying things. Not only that, not only are there shipping issues, there's trucking issues, there's chip issues. Everything is just an issue upon an issue, but the stock market keeps going up. So makes total sense. Trading in shares of the debt-laden Evergrande were halted on Monday, so that's good, unsettling markets further about the fallout of the troubles. Even as the media said, the company would sell a stake of the property management company for only $5 billion. $5 billion, it's a drop in the bucket compared to what they've been doing. I'm going to roll into this Kiyosaki story next, just because he's basically talking about it. The biggest crash. So I don't know if Kiyosaki's a fearmonger. I've read the book, Rich Dad, Poor Dad. I don't know anything else about this guy. I know he's into like saving money and this and that, but I don't know anything beyond that. So this could be a total fear-mongering story, and who's to say that they know when the biggest crash in world history is coming. But he basically said the looming default of Evergrande is an issue, second largest property developer in China. It's a house of cards that's coming down. Real estate is going to crash with the stock market. He said China's Evergrande cannot pay. The valuation of properties were fake, and it will impact the United States' real estate market. To me, if it happens, it's the debt snowball that's basically showing people that and it's not like the Dave Ramsey debt snowball. Boom. See, I know about Dave Ramsey. It's basically saying it's the contagion effect, as I read last week. If debt is starting to affect this person, it affects the next, the business of the United States, et cetera. Just moving on. There's a sign. So I went to dinner on Friday night downtown Cleveland. There's a sign on the left side of the highway. It's on the 77 north side, but you can see it from the 77 south side. And it says the debt per person in the United States average, and it crossed $86,000 this week. So $86,000 per person is the average debt in this country. So I think that's a good thing, but I could be wrong. Is this going to be the biggest crash in world history? He says yes. He says you can hedge with Bitcoin, gold, and silver. He lost me at Bitcoin, but whatever. Let's go to the next thing. What do I want to talk about next? Oh, financial advisors. So this is an interesting little ploy we have going on here. Financial advisors figured it out. Financial advisors pitch Bitcoin to investors to offset portfolio losses. So those of you that don't know, there's such thing as the wash rule, the wash sale, where you can't buy and sell assets very quickly just to try to roll with. Basically, there's rules against how you can buy and sell assets and in what time frame, and the taxation laws against them, and there's penalties and this and that. With Bitcoin, that doesn't exist. So what they have come up with, here's what they do. Investors can buy Bitcoin, Ether, or other cryptocurrencies through their broker. If cryptocurrencies fall by a certain amount, the accounts are set up to automatically sell the digital coins, generating a taxable loss that can be used to offset other investment gains. So I call it tax harvesting. The account then buys coins back in a short time frame, less than 30 days, doesn't matter because there's no wash sale rules, around the same price or even less. Doing this is a no-no with stocks, bonds, options, and other securities, thanks to the wash sale rule that restricts capital loss deductions when investors purchase an asset within 30 days of selling it for a loss. Cryptocurrencies invade that because they are considered property by the IRS, but that's likely to change, and then that's going to roll into another story that I'm going to talk about. But it is interesting. It is interesting. It's good play. I mean, if what you're looking for is tax harvesting, it's a good play. Okay, where are we next? Let's do Fed crypto. Let's roll right into that. So the digital currency, they're going to see what they're going to say about doing in digital currency for the United States. The Fed plans early this week to launch a review of the potential benefits of risks issuing a digital currency. Unlike other private cryptocurrencies, a Fed version would be issued and backed by the U.S. central bank, government entity, and as are paper dollars and coins. So to me, I've been saying it for a very long time. I do not see, if the Fed comes out with some kind of crypto, digital currency, whatever the hell you want to call it, it's not going to be the same thing as the Bitcoin crypto that we know it as of now, because it's just not. I mean, you see the regulations that are going to start to happen, and they're going to back it by the central bank, aka the Fed, and the governance. Advocates of Fed digital dollar can make it faster and cheaper to move money around the financial system, bring it to people who lack bank accounts, provide an efficient way for the government to distribute financial aid so we can create inflation faster. That's how I read that, and I think that's wonderful. He also said there are privacy issues that would need to be addressed since the Fed and CBDC system, I don't know what that is, I didn't read the acronym, would be in theory allow the central bank to see what users did with the currency. So I heard that the point is, for cryptos to be kind of under the radar, and they're not. Did I highlight anything else in here? In theory, a Fed digital dollar could be used alongside traditional paper money, but many of the details, exactly how people would access the dollar, are unclear. So here's the thing here's the way I look at it as. This would be as if, take the digital part out of it. This would be as if we're doing banking directly with the government. So instead of you going to your Bank of America, Charles Schwab, Goldman Sachs, whatever bank you do use, we're taking out the intermediary and we're basically banking with the government. Is that a good thing or a bad thing? I don't know what to tell you, but that's the way I see this. That's the way I see this one going. Well, I mean, there's not the way I see it. That's exactly what it is. There's no way that anybody could argue that if you're just banking with the government. So let's look at Tesla. Tesla delivered 241,300 vehicles in the third quarter of 2021. It looks like everybody in the world got one except for me. That number is up from 201,000 delivered in the second quarter of the year, and up about 140 from about 140,000 delivered in the third quarter of 2020. And I mean, this number, 241,000, I mean, that's a really good number in the midst of a chip shortage. And I know that electric vehicles use more chips than internal combustion engine vehicles. For the most part. I'm sure somebody can come and say, oh, this company uses more. Okay, fine. Year to date, Tesla has delivered more than 627,000 vehicles, up almost 100% compared to 2020. I don't care about that number. It was COVID. And the company did this despite the semiconductor shortage. Listen, to me, this is the point in time where I look at. So we always talk about a company is overpriced, overvalued, what have you. The company doesn't make money. The company just moves. It can't do it. It's not doing anything. Why don't we wait? Now it's getting to the point where, yes, Tesla stock is still overpriced, but now that the actual company is moving forward and doing really, really good, this is very promising for the company. This is when I would start to take a look at the company if the stock price made sense to me. Overpaying for it a long time ago with that adverse risk, that's not my thing. But now if Tesla were to pull back, which I do think it will because it's incredibly overpriced stock. Listen, if they keep doing this, that's great for them. And the other thing, with all of this market instability, they've been fine. I mean, the shares were up one tenth of a percentage last week. The Nasdaq was down 3.2% over that time. S&P was down 2.2% over that time, and Tesla was up 5% in September, and the Nasdaq was down 5% in September. So good things are coming out of that company. I still don't like the price, but I like the direction that the actual company is going in. So that's how you have to separate company and stock price. Next, I don't know if you guys watched the movie. Guys, smash the like button for me. That'd be awesome. I appreciate it. I don't know if you guys watched the movie The Many Saints of Newark. This was the prequel to The Sopranos. Great series. Movie, 3 out of 10. There was no plot. I don't understand what I'd watched. I just don't get it. There could have been so much more. I thought there was going to be something that was going to give me a storyline that kind of led up to the series. It was totally random. If you guys watched it, please let me know what you thought, because I'd be curious to know. I just didn't. I thought the movie itself was good. There was no plot. And it was so violent for no reason. It was disgusting. There were some like, I don't know what you call them. There was violence in there that they were doing to people that's not what they did in the Sopranos. They just shot a bunch of people and whacked them that way. They didn't do what they did. Oh, it's disgusting. It was like watching Saw. Anyways, the reason that I'm bringing this up, it tallied just 5 million in ticket sales over the weekend. So this comes down to releasing movies on HBO or on Netflix or however they're going to release movies that you can watch in your home versus going to a theater. Now, the projections of the film were $7 to $12 million, and here's my point. How many HBO subscribers were sold that day or on Thursday and Friday leading up to the movie, and how many are going to continue on from that path on? Because if you can get, I don't know what HBO is, $15, $20 a month, if somebody was buying it for a month, that kind of is a movie ticket, ish. You have to look at that too, and how many of those are going to continue and stay subscribed over and over and over. I watched The Big Short instead. The movie sucked. Let's see here. I really didn't like the movie. That movie was 5 stars. It was almost good, but not. Yeah, not a fan. Anyways, let's go to the next one. So this is just a fun little story. Well, I don't know how fun it is, but Americans are the greatest scam artists in the world. That's all I have to say about this. I realized it on 9/11, 2001, when people were going down to ground zero, trying to find people that were looking for their loved ones that they couldn't find. And there were people stealing identities and saying, hey, give me your social security number and I'll find them. And then they steal it was just crazy. But that's when I realized Americans are the greatest scam artists in the world. Baggage claim. 2 men charged with stealing $550,000 from airline in lost luggage scam. So this is what these guys did. They would buy tickets for a flight online using false identities and preloaded gift cards. He would then present fake identification at the airport, collect a baggage claim ticket after paying the check bag fee, yet he wouldn't actually check a bag. Jones, he would tell the airline he lost the luggage, file a claim that would be up to $3,500 in compensation, and then a month later they would send him a check for $3,500, and he did it over and over and over. Incredible. Just incredible. I don't know how to do it. That's all I got to say about that. Follow us on Instagram at TraderMo_EM, at Paul Gabriel, at Seth Kirchanan. And that's that $10 a month. It's $10 a month. That's dark. It is dark. People are screwed up, man. People are really screwed up. Why don't we look and see what the yields did? The 10-year is ticking. It's hovering about that 1.5. I don't think it's going to get to 2%. Earnings I want to pull up this week because I wanted to show you guys. Pepsi reports tomorrow. And the other one I want to show you is Conagra. I know a lot of you trade Conagra in the bid and ask, so watch out for Conagra on Thursday, and that's that. Let's see if we can refresh this. So, ran out of spots, so we're going to have more spots available here. If you guys want to join, $7 a month gets you into our Discord, 6,200 people. If you want the software, all the financial software, stock analyzer tool, real estate calculator, those are, and more is going to keep coming. And plus we give you little short videos of what you guys want to see. It's really great. If you want to join the bid and ask, $78 a month gets you access to me, Employed Trader Series, etc. And I'm going to be doing a seminar this coming Friday at 9:35 in the morning. I will give you more on that later this week, and I'll give you guys in the bid and ask a link. $500 a month gets you into Paul's Super Shorts. It's a little bit more exclusive. It's access to both me and Paul. If you want to do a one-on-one trading session with me, I'm actually doing one. I think it's tomorrow. Nope, Wednesday. $750 one-on-one Zoom call. Whatever you guys need to talk about, options. But I specifically like to talk about trading and get you guys heading in the right direction there. Day trading, swing trading, long-term trading, what have you. And that's what I love to do, and that's the way to do it. So, and if you want to do a real estate deal with Paul for 4 hours of his time, $10,000, analyze a real estate deal. And before you do something in this market, it's probably a good idea to do it. So, all right, guys, give me some stocks. We'll run through them. We got about 15 minutes, and we will go from there. And the guys, smash the like button for me. That would be good. Let's get this thing. Oh, we're only at 78, and we have 400 people watching. Come on, smash the like. Let's get it up there. Let's get it to 250 by the end of the show. With that said, I'm going to smash the like button too. And don't forget to follow me on Instagram like the Lost Islander said. Stealing never ends well. No, it doesn't. You know what, Coco? I'm gonna hold off for a second. So I put this in the bid and ask over the weekend. There was a situation that I was put in that I knew would greatly benefit me on Friday, and I decided not to do it. I knew it was going to benefit me, but I also knew it was a wrong decision based on morality. I decided not to do it. It was the right choice. But the thing is like, I heard this first from A-Rod. Of course, Buffett said it. Who knows who's the first person that said it? You're made up of the five people that you hang out with the most. And that's absolutely true. So when you start hanging around with the wrong people and you start making bad decisions, the first bad decision is always the hardest. And then it just snowballs into getting easier and easier and easier. And it's a path to destruction and hanging around with the wrong people and a disaster of your life. So hang around with the right people, do the right thing. It's going to benefit you in the end, and go with your gut. If you know something is wrong, don't do it. It's as simple as that. It's going to benefit you in the long run, especially because karma is a B. All right. Let's see here. I'm going to run through some stuff. Actually, you know what? Let's do U.S. Steel first. Somebody said U.S. Steel. Haven't looked at that one in a while. I know Steel's a little beaten down. Yeah, this is a big downtrend. But so what I would do if I was you, whoever said this, who did say this? Ryan. I would look at it from a swing trading perspective. Let this thing get into the sweet spot. Hopefully when it gets in the sweet spot, it breaks through the 200-day moving average, and you can run it right up to this 25-day moving average. I think that's a really good-looking swing trade. It could turn out to be a really good swing trade. Let's see, Dollar Tree. Dollar Tree spiked recently, didn't they? DLTR. Yeah. So now that we've calmed down, we're just gonna consolidate in this range. We had the big pole vault, and it pulled right back down, and it stopped there. So the gap will, you know what? There's not really a gap. So this looks like a gap, but draw it back here. There's not really a gap. So you're pretty set on there. If you get one engulfing candlestick today, I take that back. Why don't you look at this from a long-term perspective? Let this thing move up into the sweet spot, and you can actually fill this gap that happens right here. That would be a lot better. My hesitation here is if you get an engulfing candlestick over Friday, you're still facing resistance of 102 from that big gap up day. You would actually have to get up in this area. Then you're really coming up to the 200-day moving average. It's just, there's better options out there. So let me move my coffee over before I knock it over because I was about to do that. Yes. Okay. Next. Mo, check out KEW. Minnesota Mining Manufacturer. I appreciate that a lot as a college. That advice speaks to me. Hey, listen, it's great. This is why I avoid hanging out with Mo. All right. Yo, how many times are you going to send 3M and Minnesota Mining? What do you think this is? You think that you send this, if you send that multiple times to me, I'm going to be like, yeah, that's the one I want to do. Jesus. Newsflash, I won't do it. Let's look at MO. All right, MO. Let's see here. So let me zoom out, just see where, okay, MO is certainly broken through some sort of resistance. So this is a tough one. This is a very tough one. I'm like perplexed right now with Altria Group. So here's my issue, and I'll just kind of talk out loud to you guys. I'll think out loud to you guys. All right, so let's zoom it out here. This is a couple of years. So let's just draw a straight line across. So this is kind of the resistance or the support point we're holding. Now we broke through the 200. You still have a downtrend. If you get down into this close to 44 range, that's when I think that you should go ahead and do a short on this. But I don't think you should do anything until you get even when you get to 44. There's still this level of consolidation. You saw this happen way back. This is a tough one, guys. I don't know if I would short this thing, even from this perspective over here. It's just. Whoever asked this question, I know why you're looking at this and I like what you're thinking, but I just don't think that I don't think that it's a good idea to do this. It's a little bit too risky for me. All right. Let's look at STEM. What do we got here with STEM? Again, another brutal downtrend. And I say brutal just because it is a downtrend, but it's going sideways and not really doing much. I don't really like that. And it's fighting all of its moving averages. You know, with this one, I think unfortunately, I'm just saying, go make it easier on yourself, guys. Go make it easier on yourself. And There's no reason to make it hard. Okay, let's look at BBBY because this one had that gap down the other day, and it's just consolidating in a little range. Let me see here. Where did it go down to? Oh, so it did. See, it filled the gap. It filled that gap back here. The gap always fills. I can't tell you when. When was this? September of 2020. So it took a year, but the gap filled. Like I always say, it could be a day, it could be 6 months, it could be a year. I don't know, but the gap is always going to fill. No, even going short on this is very tough because you're going to hold a certain support level. Going short on this long term, you're same issue that I'm seeing. So let's move up here. Yeah, I know there was negative news on Altria Group. Yeah, I know there was. It's tough for me. Let's see. What do we got? Run. Let's look at Run. Ooh, so here. Okay, this is a good one. I'm glad somebody asked this. So look at this consolidation area that you're in. It's basically between, I'm going to call it $42 and $46 with the exception of this little pop right here. And you really just can't break out of that area. So to me, that's a really good indication that you can swing trade something because you can catch this down if you want, up, down. So instead of going long term on it and trying to fight the trend, I really love that you can just go up and down on these things from a swing trading perspective. So with this one, if you have a good looking trend, get some volume in, break through these moving averages right here. If you get over the 100, you're going to have a very good run up to hopefully $55. So this is something to for sure keep on your swing trade chart. I really like it. Very good. All right. What do we got next? Somebody said SPY. I would like to look at the spiders. All right. So the spiders right now the trend is down, which is not surprising based on the volatility that we've had and the exodus of cash that we've had. What day moving averages do you use? IRTN, I use 25, 50, 100, and 200. So right now, the S&P is just holding the 200-day moving average. I'm sorry, the 100-day moving average. The 200-day is looming down here at 412.79. So you can see the crazy amount of volume that we've had over the last, let's call it 2 weeks, 10 trading sessions, which is not surprising. So, yeah, let's just keep watching this one. If this yellow line gets into the sweet spot, I'm telling you, if this yellow line gets into the sweet spot, that's when you're going to make a run towards this 200-day moving average. All right. Okay. FIVN might be a swing trade. My weekly stochastic. Hey, Cliff, change your weekly stochastic setting to 1944. 1944 is what I'm now using. I put that out to the Bid and Ask Nation about 2 weeks ago. 1944 is the new setting on the long-term weekly chart. 1033 is still on the daily, but let's look at a swing. Okay, Clash, I like. So, I don't like it yet, but I like it. We got to get this thing into the sweet spot. The hard part here, Clash, you're facing 4 major moving averages that are sitting on top of each other. And you see, after this gap down, it could not break through the 200 once, twice, and it'll probably happen again. So if you want to try to get a run between 169.46, which is the 25, and 175.35, which is the 200, you can definitely do that. But yeah. Oh, Etsy. We haven't looked at Etsy in a long time. This was Jim Cramer's favorite stock in the world. Let's see what it did. Oh, I'm sad. I think he really liked it up here. Etsy is a good company. I like the app, but I don't know. All right. So with Etsy, if you're in this thing long term, if you caught this and ran it up, please take your profits off the table. If not, exit your position. I mean, you can probably prematurely exit this, but the good thing is you're holding to 200. The bad thing is this is pretty steep right here. But if nothing else, please take your profits on this and just wait. You got to be patient here. You got to be patient here. Just wait for this thing to start moving. Okay, MasterCard, I like it. MasterCard. What does this person say? It's kind of funny how IRM has an average of 1.3 million shares and Space has a 15 million. Are people really swinging Space? I think a lot of what happens in Space is a lot of the the quants. I think a lot of the quants get in there, and when certain things hit certain levels, the computers just execute tons and tons of trades, moving that thing up and down because they know that that's a very volatile stock, and that there's a lot of that hype consumer investors that play with that thing. So I do think that quants are involved with space. Just my opinion. I could be totally wrong, but I'm usually not. Let's see. This thing is, I like the trend. I really do like the trend. But you're facing a lot of resistance here at $364. Well, that makes perfect sense. 364.52. That's a 100-day moving average. So, yeah, I mean, if you want to sit on this thing, lay in the weeds, this is a good tracker share stock. If you want to buy a tracker share of this or a fractional share of this because it's a little bit pricey, you can go ahead and do that. But yeah, I'm not opposed to it, not yet, but I'm not opposed to it. All right, what do we got? Yep, Simon 1944. It's in the bid and ask. FUV. I don't know if I've ever done this one. The smirk. All right, so FUV is obviously just consolidating and not doing anything. I mean, this is more likely than not a swing trade, if anything, but going long term on this. Why don't we zoom out and see what this thing has done? So even here, so even here, even with that uptrend, I mean, you got it, but you had those big days of volatility, big weeks of volatility. To me, whoever asked this question, I just can't see the name up there anymore. I think that you should, if anything, swing trade this or day trade this. What's the volume here? Low volume. I don't know. I don't like low volume stocks. All right. What else we got? Wow, this guy is much better than Meat Cuckin. I appreciate that, Net Ghost, if you're being sincere. All right, let's see. Am I better than StockMo? The one place that StockMo and I differ is when I look at a value play, I don't look at the 5-minute chart. And also when I look at a value play, I don't say that the last quarter of earnings was the future projections like he did. Whoops. All right. What do we got here? VFC. So, this is, again, we have a lot, we have a lot of stocks that are starting to look really promising here on the weekly. I really like that. But this is where you start putting in, maybe at this point, because there's a lot of stocks that you could put in here for a tracker share. By the way, the stock market's open. A lot of things that you can put in here for a tracker share. Maybe you create a watch list that's called my tight watch list and then the watch list. And the tight watch list is the ones that those should be your tracker share stocks. But if you start going and put tracker shares on all these, it's going to add up to a lot of money. Maybe you just make sure you follow that watch list like flies on what, and you will you'll do pretty well. But you're getting some promising trends going on here. I really like it. All right, let's see. Let me do a couple more. I can stick around for an extra few minutes. If you know, you know. Why don't we look at Alibaba from a trading aspect? So this thing's just been beaten down. It looks like any other Chinese stock. It's no surprise. What's our next support? The reason I'm zooming out this far is I just want to look at the next support level. Can I do a 5-year here? Oh, wrong one. 5-year here. 5-year daily. Hold on. Okay. So what I'm looking at, 130 is the next support level. But even now, I mean, we're holding a pretty nice support level here at 100, 145, 141, 140, whatever it is. So, like I said, I'm not worried about Alibaba, but this is not something that I would be trading, guys. If you want to trade with this thing, I think that you should be doing swing trades or day trades, if nothing else, or value plays. I do not think that you should do these long-term stuff. Okay, I'm gonna do two more. I'm gonna do one that I want and one that you guys want. So I'm gonna do UAL because I haven't looked in a while. Okay, this is a total random stock that just popped into my head. I really like the way this trend is going. Now, if you get this yellow line into the sweet spot and create this separation between the two, this is looking really good. I think you can get a solid run up to $54 or $60 depending. You just blasted through on Friday 2 moving averages that were sitting right on top of each other, and you opened above it today. That's a really good pattern. So if you get an engulfing candlestick today, hey, I'm not opposed to adding to this thing. It's actually a really good looking thing. All right, what else do you have? I'm going to do one more stock, and then I'm going to get out of here. What stochastic does Mo use? HPOYO, this side over here, this is my weekly stochastic. This is set at 19.44. And this one over here, this is my daily stochastic. This is set at 10.33. And it's in the bid and ask if you guys want to know. Okay, I'm going to do TSM. Taiwan Semiconductors. So let's just zoom out here. Taiwan Semiconductors is consolidating hard in this area. So we are definitely, I would not go short on this just because you're at that consolidation base. Even though you have a downtrend, I would not bet on this thing falling through here unless the market falls. Because if the market falls, this whole thing is going to fall because it's tech. Now, what I would rather do is I wouldn't even use this. I would wait for this thing to turn up and start rebounding. You see how low you're at $110. Your next moving average is $116.69. I would wait for this thing to get into the sweet spot and capitalize on that. If it can get through those two, who knows where it can go? Maybe 126. But this is an optimal swing trade. I really like what it's looking like. And that's that. Okay, I lied. I'm going to do one more for I Ernesto because he did ask and he didn't spam me, and I like that. Okay, let's see. Oh, what is this? ASML. I typed it in wrong. ASML. All right, I'm assuming you're asking me this because it got beaten down. I don't know what this is. New York Register. I have no clue. But yeah, so the bad news for you is that you broke through the 100. The good news for you, and I'm going to take a zip out here real quick because I think all I want to do is see where the support is. There really is none. Yeah, there's really no support here. The next support level is 680. So, hey, if you want to short this thing, what I would do to be confident is let this yellow line get into the sweet spot and then wait for an engulfing candlestick and short it. But this is actually looking like a really good short from a long-term perspective. I don't really like it over here I don't like the stochastic over here. That's the problem. But if you're looking at this long-term, let this yellow line get into the sweet spot, start moving down, and we'll go through there. What are those numbers? Keenan, if you want to look at what those numbers mean, it's on Investopedia. It just has to do with smoothing mechanisms and whatnot. Yeah. Dionut, thank you for typing that in. Daily Dose of Mo, if you know the reference. Let's see. Dionut, thank you very much. Facebook, all right, I'll look at Facebook too. Why not? Facebook. All right, guys, remember, this coming Friday, 9:35, actually at this moment in time, 9:35 and 46 seconds, in a week, I will be doing a seminar for you guys. I did one on Friday, but it was really short notice, so this one I want to do it again just in case you weren't able to attend. They are archived, but I want to do it again, another one for you. Yeah, this is actually a pretty good looking short. The only thing I don't like shorting tech because it can rebound, and if you notice, we are at this point right here and right here. That's kind of where we're sitting, and that is a strong support level. So if we break through that, like today, if we break down here, you can short this thing. Just keep an eye on your volume. Make sure that you get good, consistent volume along this average. If this thing starts to fall, if the volume starts to decline, do not be short in this thing because that tells me that this thing is going to reverse. And the one thing I would tell you, pay attention to this candlestick today. If this candlestick turns out to look like this, a hammer formation, that indicates a change in direction back to the top. So if you get a candlestick like this today, I want you to know that there is a high likelihood that that thing rebounds. What do I think of Evergrande's trading getting suspended? That's a joke. That whole thing is just a disaster. Who has $306 billion of debt? That's insane. I mean, come on. Let's see. Anything else before I get out of here? Everyone have a great day. All right, that's it, guys. So I will see you in less than 23 and a half hours. We will do it all over again here on Everything Money. Often imitated, never duplicated. Have a wonderful day.